Travel and leisure, that was our mystery chart, surging more than 15% today on better than expected earnings and full year guidance hike after vacation ownership and spending climbed in the third quarter. The stock is now up about 38% this year. Joining me now with more on those numbers and the state of the travel industry is Mike Brown, President and CEO of Travel and Leisure. Mike, it's great to speak with you today.
It's great to be back on the show. Nice to meet you, Morgan.
So let's talk about this, what you saw last quarter and how it's benefiting the company.
Yeah, fundamentally, we're 100% leisure travel focused, and being in the vacation ownership brands business, we have great brands like Wyndham, Accor, Sports Illustrated, Margaritaville. And what we're seeing from those leisure consumers is a desire to continue to travel. And given that our 800,000 member owner base, nearly 80% of them have already paid for their ownership, there's no reason for them not to travel. And we saw that demand really continue in Q3. And with a vision into Q4 of about a 90-day booking window, we know Q4 as well will stay strong for leisure travel. And it showed up in our earnings report.
So how much of that signals the fact that maybe your portfolio and the way your owners and your users are traveling is less cyclical versus the fact that the consumer's just holding up in general better than maybe perhaps people had expected just a couple months ago?
Well, I think you have to look across broader hospitality to see the variations of performance on how the consumers are holding up in the forward demand. As I mentioned, our forward demand is very strong, but the reality is if you've already paid for your ownership, we've seen coming over the last 5 years coming out of COVID that leisure travel is one of the last things that people will give up and one of the first things they will return to after tough economic times. There's no reason for our consumers not to travel. They often distinguish whether it's a fly-to destination or a drive-to. But even that statistic that we watch very closely is not showing signs that consumer or leisure travel is lightening up. And therefore, in high inflationary times like we've seen in the last 5 years, people see the value of their ownership that they might have bought pre-COVID, getting to enjoy vacation at a small fraction of the price they would have otherwise had to pay for a hotel room that's priced at today's prices. When
you're a timeshare owner or a member, you tend to be able to choose or switch around where you're going to go and when as well within the portfolio. Are you seeing any sort of shifts in terms of demand right now, globally speaking or geographically speaking?
Demand's stayed fairly consistently on a regional basis or market basis. We saw especially high demand this summer in the Smoky Mountains of Tennessee. It's a great regional drive-to from the Mid-Atlantic and Midwest, and that destination is becoming super popular. I know Las Vegas has had its tougher times this year, but we saw a lot of popularity there. And then I think finally, especially coming out of the summer season, the Southeast beach destinations or the California coast were some of our most popular demand locations this past summer. It may say a little bit toward hesitancy that's often talked about with the consumer that they're choosing to drive to versus these mid to long haul fly destinations. But we're also hearing that coming up in 26, cruise is going to be a big year for 2026. So all around consistent demand with a few hot spots that I mentioned and a little more drive to.